Okay, we are going to talk about Form 22A and low appraisals today. So I do all my teaching in Express forms. I recommend that you do all of your form filling out in Transaction Desk, so you can easily throw it into Authentisign. This way you don't have to do double entry where you fill it out here and then upload it to be signed and so forth. So always use Transaction Desk to actually physically fill out your forms. If you ever need to know what a form is, this is a great tool to use in Express Forms. You can always use the search bar to figure out what you need, what form you might need if you don't know the number. The numbers haven't really changed much in the last 30 years unless they've added new forms. So the reason I have all these form numbers in my head is because I've been doing this for so long. So I don't expect it to come naturally all the time. But the financing form is Form 22A. Also, you'll notice there's a manual on most forms on the right-hand side that you can grab, and it'll give you some ideas of why you would use this form or how you might be able to fill it out. The MLS is not very helpful when it comes to filling out forms because they expect us to do that at this level, the office level, with you guys. So they're not going to be very helpful when it comes to like, what form should I use? How should I fill it out? Those types of things. Okay, Form 22A. I'm going to blow it up a bit so my people here in class can see it. Just like most forms, the preamble that's up here, you have to fill out. So the date that you fill in here will be the same date that you fill in for the contract. What day are you physically writing the contract? That date goes into the sales agreement date. Your buyer's names go in here. Notice there's a slot for just 2 people. If you need more signers, more buyers, let's say you've got a family that's buying something together, you can utilize Form 22ZZ, zebra, that gives you a more robust form for adding those extra people so that because they don't all fit here, and trying to figure out where for them to sign on here can be difficult. So you can always use 22ZZ to add additional buyers that you have more than 2. If it's a POA, a power of attorney, the names up here will be different. If it is a trust, it'll be different. If it's an LLC, it'll be different. So making sure you know who the buyers are and how they are going to be vesting in title. Sellers go here, of course, and of course the address of the property. You utilize this form if the client is doing or wants a contingency for financing. This is a protection of their earnest money, right? So if they can't get financing, they get their earnest money back. That is the whole preface of why you would want a financing contingency in your offer. Most forms that you're going to be adding to the contract will tell you that they are addendums. Well, the contingency we get wrapped around is when somebody has to sell their home in order to buy the next home. But realize that this is not just an addendum, it's a protection, which also means it's a contingency. It's contingent upon the buyer obtaining financing of the following loan types. You have options here. You've got conventional first. If they're getting one loan, it's conventional, you check that box. If they're getting a first and a second because they don't want private mortgage insurance, meaning that they do not have the 20% down and they would get PMI, private mortgage insurance, maybe they're doing a first and a second to lessen that insurance, even though because it's less expensive to have a first and a second than it is to pay the private mortgage insurance. So it's very common in the lending world. And this is when you talk to the lender, when you've gotten your buyer, you've done your consultation. If they already have a lender in mind, you're going to want to talk to the lender and say, okay, lender, tell me what I need to know about this. I've got people that need in. Hold on. Tell the lender, I need to know what I don't know. Okay. So they've told me it's a single buyer. Is there anybody else involved that you know of? Is there co-signers? Is there somebody else that needs to be on title? Or maybe there's 2 buyers, only one is going on title. Do they need closing costs paid for by the seller? What type of loan program are they doing and how much is their down payment? Your job with the buyer is when I fill out these forms with you, I need to know where your money is. Is all of your money ready to go? So when you tell me you're doing 10%, 15%, 20% down, do you have the money in your bank that you can write a check today? So the lender can help confirm that as well. So you'll check the boxes based on the type of financing. A bridge loan, if they're bridging from one house, their primary house, they're bridging the gap to the new house. And then when they get the new house, they're going to move in there and then they're going to sell the other house and then that loan closes. Are they VA? Are they FHA? Are they USDA? That's going to be your Carnation, your Falls City, your Duval, the areas out there that are more farmland style agricultural land. Are they going to do a home equity? Daniel?
Sometimes lenders, they are not sure whether they can be conventional or FHA, can we pick two?
So the question is, sometimes the lender doesn't know what type of loan they're doing. That means they haven't gotten very far in the program. And can you check 2 boxes? The problem with checking 2 boxes is if they can't get the one loan, but they can still get the second loan, but they really don't want to buy the house now. That will get your client stuck with having to do one or the other. Even though they don't want to, they still have to pick one. So the lender would have to physically fail their financing based on conventional and FHA. Sorry about that. Let's just put on do not disturb if we can figure that out. Focus. Do not disturb. Perfect. Sorry about that. This is what happens when you own Mac and it rings through everything. So I highly recommend that they pick one type of financing. Okay.
And there's also, there's also the point where it's, if you're gonna make an offer with an addendum, normally the lender will have a pre-qualification or
Yes.
pre-approval already at that point.
They
And
should.
they'll have gone through at least the bare minimum of conventional or
FHA. There is true. So that's a good point and brings me to my next conversation. You are not going to want to show houses to somebody that you don't know can't afford the house. And if you'll know how much they can afford because they've talked to a lender. If they talk to a lender, the lender can very much say at a bare minimum, they're X, right? FHA. Okay. The lender will know based on pre-qualification on which program they need to go with. And then we will talk about if the buyer needs to change programs as well, okay? Down payment programs. This is where they might be getting grant money or from another institution that's going to give them a down payment assistance. If the money, so when I say down payment, that means the down payment they're putting on the property. So you'll notice that this line, buyer shall make a down payment in the amount of either a dollar figure or a percentage. If they're using a down payment program, and the down payment program is going to give them 10%, and they tell you that their max down payment is 10%, your number here is going to be 0. That is because the buyer is not physically paying any of the down payment. They've got a down payment assistant program that's paying the 10% for them. Let's say that the down payment's doing 10, but the buyer can really do 15 total. You're going to put a 5 here. And that will equal their total 15. If I were to put 15% here and something happens with the down payment program and they can't get it, your buyer is now on the hook to put 15% down. So you'd be very careful if they have an assisted program helping them with any sort of money. So if you're newer in the business and you're not quite sure what to do, please call me. If you're not in my office, you're in one of the other offices, call your designated broker and they can help walk you through how to fill out this form correctly. The last thing you want to do is get them stuck into something here and then they don't get the money. And now they will lose their earnest money because they said they could do this when in fact, really what they meant was 5% or 0. Okay. Any questions on that? Okay. Buyer has to make application. So a buyer may go sit in with a lender and the lender says, okay, FHA 500,000. Okay. And maybe that is simply just a pre-qual, meaning Jamal has come and sat down with me, the lender. He's given me some information. I have verified nothing as the lender. I have pre-qualified him based on this information. He's not approved because it hasn't gone through underwriting. He hasn't given me any documentation. I am simply qualifying him that based on what he's telling me, whether right or wrong, that I'm saying, okay, FHA 3% down. He says he's got the money in his bank account, 500,000. Based on his income, what he's telling me his debt to income ratio is, then all of the paperwork starts to happen. So within 5 days, the buyer has to physically fill out the application. It'll probably be online more than likely. Fill out the application. Then it starts to go to underwriting. Doesn't mean that he has to have all of his documentation to me. He simply has to make application for the loan. So I can start the process. He's giving me the authorization to me, the lender, saying, yes, start the process. Okay, he has 5 business days to do that. Remember, computation of time. 5 days or less are business days only. They do not count weekends, can't start on the weekends, can't end on the weekends or holidays. 6 days or more can count the weekends and holidays, but can't end on it. So we just had the 4th of July. So let's say that we put a 6 here instead of a 5. And Jamal got mutual acceptance on Thursday, the 2nd. The legal holiday for computation of time was actually Friday, the 3rd, even though the holiday was on Saturday, the 4th. So let's say it was 6 days. So that means we reached mutual today, July 2nd. I have to count the holiday now because it's 5 days, it's 6 days or more. So it would be Friday, Saturday, Sunday, Monday, Tuesday, Wednesday, he'd have to make application. If I had a 5 here and we reach mutual on Thursday, then we go Monday, Tuesday, Wednesday, Thursday, Friday, Saturday can't end, you go all the way to Monday. So that one day with a holiday specifically can make a big difference. On a non-holiday week, a 5-day window is the same thing as a 7-day window. Okay? Because you can, I swear, I don't even know. I told you, you guys saw me do it. It says do not disturb. Even there it says do not disturb. So I apologize every day. I don't know what to do except for turn off my phone, and I don't know what happens when I do that. It doesn't sometimes come back on, so we're not going to do that. So I do apologize. Now, let's say I go down to this line. So application means submitting the buyer's financial information for the purpose of obtaining an extension of credit, including the buyer's name, income, social security number, the property address, purchase price, and the loan amount. Okay, that is the application. However, if we go to 1B, waiver of financing contingency, if the buyer fails to make the application that 5 days, their financing contingency is waived. Now they're just stuck. So this contingency doesn't exist. Or if they change the loan type after mutual acceptance. So like, let's say in Daniel's case, they weren't sure what they were doing, but they picked conventional. And then they found out they can only do FHA, and they change it to FHA after mutual acceptance. The buyer has now waived their contingency. So making sure the buyer understands, do not do anything until you talk to me first. I have to protect you based on the contingencies, based on what I know of the forms. If the buyer changes lenders after our 5 days, they've waived their financing. Now, to cure any of that, before they do any of that, you can get written consent from the seller to change lenders, change loan types, change down payment amounts. Okay. So upon mutual acceptance, the buyer cannot, without seller's written consent, change the loan type or the down payment amount. The 5-day window states once the 5th day is over, the buyer cannot change lenders without seller's written consent. If they do any of that based on time periods, they have waived their financing and their earnest money is not protected any longer. So that's why they need to keep you in the loop. And that's something you tell the lender too. Sometimes the lenders have no idea. They say they don't know. They should know if they've been in the business long enough. The caveat to that is if this line is filled out with ABC mortgage, then that means these 5 days up here are gone. Upon mutual acceptance, they cannot change lenders if this line, which is line 19, if you look at the right-hand side here, if this is filled out, they do not have 5 days. Upon mutual acceptance, that's the only lender they can use unless they have seller's written consent. Okay. Financing contingency options, 2A, 2B. 2A, buyer friendly. 2B, seller friendly. Depending on if you do not check a box, A automatically apply. So this does have a default. Some do, some don't. Again, this is buyer friendly. If you use the default days, let's say you have a 30-day closing, 21 days is plenty of time for the buyer to obtain financing as well as have the appraisal done. So on the 21st day, the seller can ask the buyer to waive their financing contingency. It doesn't automatically waive. Seller has to ask based on serving the buyer Form 22AR. The buyer can say yes. The financing is waived. On day 22, they lose their job. They have no more financing contingency. That's the risk the buyer takes. On the 21st day, the seller asks. The buyer says no. Seller can, 1, terminate the contract, buyer gets their earnest money back, or 2, the buyer can say no again, and the seller can say, well, you know what? we're only 9 days away from closing. Let's just write it out. So if they say yes, they lose their earnest money. If they lose their job, if they don't close. If they say no, seller can either terminate or they can say, fine, let's just move forward. That's buyer friendly. Seller friendly. Well, let me go back to this. So appraised less than sales price. The default is that your appraisal will not be waived, but appraisal should be done by now. So you can either check the box, it will or will not. If you leave it blank again, it will not be the default, meaning it does, if I waive financing, the appraisal contingency is still in play and it's fine. 2B says on, let's say the 21st day, and you have not served the seller termination notice because buyer has been unable to obtain financing. If you don't serve that on the 21st day at 9 p.m., the buyer's financing contingency automatically waives. So that's seller friendly. Again, you have the appraised value, will or will not. Again, the default is will not. That will always stay as a protection for the buyer that it will not automatically waive. Again, if you're a listing agent, you might want to counter the seller and let the seller know why option 2B would be in their better interest. Again, in today's market, I don't know that that's going to make a buyer very happy. We are not in a lot of multiple offer situations. If you are going to be in multiple offer situations, you might want to absolutely change it from A to B and explain that to the seller, what that means for them and the buyer. Any questions? Okay. Page 2, paragraph 3, loan cost provisions. The seller shall pay up to, notice the words up to, X dollars or X percentage. This means the seller is going to pay the buyer's closing costs in whichever format, sale price or percentage. If you put in here 10% and you didn't check with the lender how much the buyer can actually get, then if the buyer can only get 3%, the other 7%, that goes back to the seller. The buyer doesn't get it, okay? Usually, in most cases, they can go anywhere from 3 to 6%, but that is one of the questions you ask the lender. How much can anybody in the transaction contribute towards the buyer's allowable closing costs? If there's too much money here, there's times where they can buy down the rate. There's multiple options on what they could maybe use the full 10% for. Some sellers are offering to buy down rates right now because they're rather expensive compared to a couple of years ago. But making sure that you don't overput a number here, because the buyer assumes that they get this money if there's an overage. They don't get this money. The seller legally cannot leave them a check in the house, cash in a brown paper bag on the back porch, bunch of gift cards to Home Depot, Lowe's, and Pottery Barn for furniture. That would be lender fraud. The buyer can only get the amount of money the lender will allow from any party in the transaction at the max level. That's it. So when you're filling this number in, let's say we do 3%. When you're filling this number in, remember and remind your buyer, you're also going to have an inspection. Do you want the seller to fix the problems if we find them? Do you want the seller to lower the cost of the house, reduce the sales price? Or do you want them to give you more closing cost money that you can use then towards the repairs? So if the seller is going to say, Daniel, I am going to agree to 2% towards your allowable closing costs. That means so I have to bring in, let's say 5%, right? I've got 3% because of the financing contingency. I'm allowed 6% total. I have an additional 2% I have to physically bring in as a buyer, but the seller, Daniel, is saying, I'll give you 2% towards all the closing costs based on your inspection. So that means all that 5%, I knew I didn't have to bring in the 3%. I'm going to keep that in my bank account, in my pocket. Now I've got another 2% I can keep in my bank account or pocket. So when the time comes, I move in, I need to make repairs. That 5% I can pull out of my bank account because the seller already paid for it for me. So they just let me keep my money. And now I can do the repairs. Okay. But again, if you max out on the financing contingency, you can't ask for closing costs in the inspection. Okay. Earnest money. If the buyer has not waived the financing contingency, but is unable to obtain financing by the closing date. So it used to be that the failed financing survived the closing date, meaning We are still trying to figure it out. We're 5 days past closing. Now lender says, nope, you still can't do it. Now we're 5 days past closing. Now I'm going to lose my earnest money. So the lender has to fail the financing on the closing date or before. There's no more after. So be very careful about this. And then, of course, after a good faith effort, meaning that the buyer didn't go and tank the financing to be failed by buying cars and furniture and opening a bunch of credit cards. That's bad faith. On buyer's notice on or before the closing date, this agreement shall terminate. The earnest money shall be refunded as a consequence of buyer's failure to obtain financing only if the lender confirms in writing to the seller 20 days after closing. So if this lender doesn't give you the letter, you as the broker have the job that you must terminate utilizing the failed financing form 90I. And make sure you double check that, because sometimes I get my letters wrong. I know it's a 90 series because those are all termination or notices. I cannot guarantee it's an I, but I am 99% sure it's I. 90I and Form 50 for return of earnest money. Even though the lender has not given you the letter, you better make darn sure, though, that the lender is going to give you the letter no later than 20 days after closing. I want it now, meaning I'm going to terminate today. I have 2 days till closing. Lender, I want the letter now. Lender's like, well, I can't give it to you right now. I'm in the middle of Jamaica, whatever the situation is. So I need it within 20 days after closing. That's the only thing that you can get after closing. But your job is to serve 90I and Form 50 for return of earnest money for failure to obtain financing before closing or on the closing date before 9 p.m. That is your job as the broker. The letter comes, and the letter has to state 3 things. The reason for failure, that the buyer had sufficient funds to close, meaning they didn't bleed out their bank account of their $50,000 down payment to buy something else, and that they made application on time. So again, you got to be very careful with this section up here. If this is filled in, that means they've already made their application. If they've not made their application, number one, I would never fill this in as a buyer broker, utilizing your 5-day window. Okay, so they had to have made applications within those 5 business days. They had to have sufficient funds to close. And what is the reason they failed financing? Got terminated from their job. It cannot be, well, it could be debt to income ratio. That would be one reason, but it can't be they didn't have enough money to close. That's sufficient funds to close. So that would not be tanking their finance. That would be tanking their financing. They will lose their earnest money. Okay. Yes.
What about, for example, when you get like pre-approval, you provide everything, social security, everything like that.
Okay.
What about after mutual agreement, we have to do again application?
No. So the question was, if the buyer made application prior to mutual or prior to even making an offer, do they have to make application again? No, as long as they've done their application. But again, that 5-day window, if that's what the buyer so chooses versus telling them I'm going to use this lender, they have 5 business days to shop lenders. And so that could all change. So if they made application with this person, but they're going, if they made it with A, but they're going to go with B, they need to make application with B within those 5 days. You're welcome. Let's see here. Appraisal less than sales price. If the lender's appraised value of the property is less than the purchase price, buyer may within 3 days after receipt of a copy of the lender's appraisal give notice of low appraisal, which shall include a copy of the appraisal and serve Form 22AN, which is 22A is the form and the N means notice. I'm giving seller notice that my appraisal came in low. If they do not do that within 3 days, they have to pay the difference. So you need to make sure you as the broker are always tracking time. So the minute you get notice about low appraisal, they have 3 days to do it. They have 3 days to give notice. Seller, my appraisal came in low. Seller shall respond within 10 days. Those are going to be calendar days because it's over 5 days. After buyer's notice to give, seller can say, I want a reappraisal of value or reconsideration. Maybe they'll say, underwriter, will you reconsider what the appraiser gave you? Because you know what, this is a tri-level home and they gave you comps of a split level and ramblers. Like those are not apples to apples. They're not as comparable, right? So they need to get as close as they can. And appraisers, when they appraise a property, they're going to take what they see. They're going to find as many properties that match that. And if those properties can't match that, they have the opportunity to add or subtract value. So if they find that this house is more desirable and this house, if let's say that the Rambler's more desirable, they can say, okay, I'm going to retract $20,000 to help come up with the value. Okay, that's the appraiser's job. The buyer shall promptly seek lender's approval of such appraisal or reconsideration. So I, as the buyer, have to say, lender, would you please consider a reappraisal or consideration? And lender will always say yes. That means that another appraiser has to go out, or maybe the same one if they're going to reconsider the value. And the parties are advised that the lender may not elect to accept an appraisal. The parties are advised that the lender may not select to approve that. Basically, the lender does not have to allow a reappraisal or reconsideration. Seller can consent to reduce the purchase price to an amount not more than the amount specified in the appraisal or reappraisal by the same appraiser or an appraiser of another appraiser acceptable. This provision does not apply to FHA or VA or USDA. So if the seller says, so let's say our property is listed at 500 and the value came in at 475. Seller says, I will lower my purchase price to 475. Conventional has to agree and move forward. USDA, VA, and FHA do not have to agree to that. They can terminate the transaction. Only conventional bridge loans, HELOC, those types of loans are the only ones that have to move forward. Seller proposes to reduce the purchase price to an amount more than the appraised value, meaning it appraised at 475, we're at 500. Seller says, I will come down to 490. Buyer, you have to pay $10,000 difference. That would be another option. If the seller timely delivers the notice, reappraisal, or reconsideration of value, then everybody has to move forward unless, of course, it is, I've come down to 475. VA, FHA, USDA does not have to accept that. They can accept it, or they can terminate and get their earnest money back. The buyer shall have 3 days from either the seller's notice of rejection or low appraisal. If the seller fails to respond, the day the seller's response period ends, whichever is earlier, waive the financing contingency, or B, terminate the agreement, in which event the earnest money shall be refunded to the buyer. If the seller proposes to reduce the purchase price to an amount more than the appraised value, buyer shall have 3 days to either accept or terminate the agreement. So again, in our 475 versus 500, seller says, I'll come down to 490. Buyer can either say yes or terminate, no matter what type of loan they're having. If the seller intends to reduce the purchase price to an amount not more than the appraised value, buyer shall have 3 days to give notice that the buyer will buy at the reduced price or terminate the transaction if they're VA, USDA, or FHA. Buyer's inactions during this reply period shall result in termination of the agreement and return the earnest money to the buyer. The closing date shall be extended as necessary to accommodate the foregoing times of notices. So paying attention to that, we are seeing a lot more low appraisals. We'll go into what the low appraisal form look like and how you would use it. Seller shall permit appraisals and inspections required by the lender, including but not limited to structural, pest, heating, plumbing, all of them. The parties acknowledge that the lender's appraisal may have a condition the appraised value of the property be completed or approved of the work orders prior to closing. Buyer shall, within 3 days of receiving an appraisal work order, give notice to the seller. If the buyer is unable to obtain financing by the closing date to an incomplete appraisal work order on buyer's notice, this will terminate. If the buyer is not waived, paragraph 5, the earnest money shall be refunded. So notice that if the buyer waives their financing contingency and now there's work orders, buyer cannot terminate the transaction if the seller doesn't do the work orders. And seller never has to agree to work orders. They have to allow the inspections, but they do not have to agree to the work orders. There was somebody in one of our other offices this week said, my buyer is going to do the work based on the work orders required by the lender. Excuse me. How do I protect my buyer to do those work orders when we're not closed? There is no way to, it's a huge risk to all parties involved. Number one, excuse me, if the buyer cannot close after they've done the work items, the seller doesn't have to reimburse them. If the buyer gets hurt at the property or somebody gets hurt, the seller, their insurance company will have to cover those claims. So again, it's a huge risk to whatever party is agreeing to do this. And we have no forms to protect them. So if your client, your buyer wants to do the work orders because the seller won't do it because they really want the property and seller says, you can do them, just know that an attorney is going to need to write whatever that agreement is going to look like. We do not have the ability to do it. You cannot use AI programs to write it either. Okay. You might have to have the agreement's condition on FHA, VA, or USDA, notwithstanding other provisions. Buyer is not obligated to complete the purchase of the property unless the buyer has been given in accordance with those entities' requirements of a written statement by those entities or a direct endorsement letter. The appraised valuation is arrived at only to determine the max mortgage for VA, FHA, USDA. Buyer agrees to satisfy themselves that the price and condition of the property are acceptable. In a VA, you will more than likely have to sign a mandatory clause. If the buyer is obtaining a VA, it is expressly agreed that notwithstanding any other provisions of this contract, the purchaser shall not incur any penalty by forfeiture of earnest money or otherwise be obligated to complete the purchase if the contract purchase price or costs exceed the reasonable value of the property appraisal established by the Department of Veterans. The purchaser shall, however, have the privilege and option of proceeding with the purchase without regards to the amount of the reasonable value if they so choose. Something I did not touch on now that we talk about VA. You as listing agents, be very careful with paragraph 3 if the buyer is a VA buyer. It's not a bad thing, but it's something your sellers need to understand. If this box is checked, the buyer shall pay buyer's share of the escrow fee for the VA loan. Note that the VA regulations prohibit the buyer from paying loan and settlement costs exceeding 1% of the amount of the loan. So the buyer saying, I will pay what is allowed by the VA for the escrow fees. If this box is not checked, if your seller is under the impression that all they're going to have to concede on is a 3% payment for closing costs on behalf of the buyer, and this box is not checked, the seller is paying more money. Okay, they have to pay all of the closing costs for the buyer on whatever the additional closing costs are. So if they say I'm going to pay a max of this, you need to explain to your seller that there may be other costs that are not associated with this 3% that the seller is going to be responsible for, so that they understand. We had a situation in another office where it was not explained well enough to the seller, and there was so much money that the seller was paying on behalf for the buyer that our broker had to reduce their commissions so low they barely got paid because they did not take the time to explain everything to the seller. The seller says, I want to net this, and they netted this. And so therefore the person that had to pay for that, because there was no explanation, no counteroffers, the broker had to reap those costs for the seller. Okay, so be very careful of that. Extension of closing. If through no fault of the buyer, the lender is required by 12 CFR 1026 to give corrected disclosure to the buyer, the CDs, change of the APR of the buyer's loan by 0.125% or more for a fixed rate loan of 2.250% or more. A change in the loan product in the addition of the repayment penalty, then upon buyer's notice, the closing date shall be extended up to 4 days to accommodate the requirements of Regulation Z. This very, very, very regular.
Hi, Hannah.
Hello? That's somebody who's walking in the room. I think they muted. Any questions on 22A, whether in the room or online? Okay, let's take a look at some of our other forms. Let's look at 22AC. AC is going to be your consent form. If your buyer wants to change the lender or the loan type, you are going to use 22AC before your buyer does anything. Okay, so this is consent to make changes. Seller consents to the change of the loan type. So from FHA to conventional or conventional to FHA as an example. To X. So from loan type, conventional to FHA. Buyer shall make application for the new loan within 3 business days unless you change the default, fill in a different number. After receiving seller's consent, if the buyer does not timely apply, buyer waives their financing contingency, including low appraisal. So if they forget to make application with an FHA for an FHA loan, they waive their financing contingency and they waive their appraisal contingency. So be very careful. Or they want to change lenders, or maybe they want to do both. They want to change from ABC mortgage. Can't see. To ZYX mortgage. And they have 3 days or whatever amount of time period you put in there to make that change. They're going to know when they need to make changes and how they need to make changes. It is always best. I know we're trying to protect our buyers, but it's also best that you keep them moving because we're approaching a closing date and the seller does not have to agree to extend our closing date. Now, if they can't obtain financing, then again, you need to tank it on the day of closing or prior to. So if they can't make the closing date and the seller will not do an extension, then the lender will tell you, I'm sorry, we cannot close based on this. If the seller won't extend the closing, then you will have a reason to fail financing and terminate based on that information. Okay, any questions on consent? Again, this is something you have to drill into both the buyer's head and the lender's head. Please do not make any changes to the loan program or the lender without talking to me first, your broker. Talk about 22AN. Now, you will also not use Form 22A, financing contingency, and 22AA at the same time, appraisal contingency. If you don't have financing, but your buyer wants appraisal contingency, then you don't use 22A, only use 22AA, okay? Notice of low appraisal. So within 3 days of this, the buyer learning they're not going to get finance, they're not going to appraise at value, then you need to check the box. Buyer gives notice that the buyer's lender's appraised value of the property is less than the purchase price. A copy of the lender's appraisal is attached to this notice. The seller's going to respond within 10 days on the same form. Notice of reappraisal or reconsideration. That's what I want, seller says. Or I will consent to reduce the purchase price to an amount that is not more than the appraised value. So I'm going to come down to the amount of $475. Okay, if that's what they choose. Or I will come down to $490. Or notice of the rejection of low appraisal. Seller gives notice that the seller rejects the buyer's notice of low appraisal, will not cause a reappraisal or reconsideration to happen, does not consent to a reduction of the purchase price, or does not propose a new reduced price. Those are the 4 options the seller has. Until the seller checks one of these boxes, buyer can do nothing. Buyer cannot terminate. They have to just tell the seller, we have a low appraisal. Again, if they are conventional, and seller checks box number 2, buyer's now moving forward to closing, okay? If seller checks box number 3, buyer can say notice of termination, notice of waiver of financing, accept the reduced purchase price, or buyer's option, seller consented to reduce the purchase price to an amount not more than appraised value. So seller agreed to come down to $475, but I'm a VA, FHA, or USDA buyer. I don't have to agree and I can terminate. Those are the buyer's options. Okay. So again, it's really going to depend. Where'd my mouse go? I lost my mouse. There she is. It's really going to depend on what the seller picks on the second section. Okay. And is the buyer conventional or VA, USDA, FHA? Okay. So it's really going to depend on those items. Now let's just confirm, Daniel, did I remember my correct financing failure form? I did. Yes, Daniel, we did it. So 90I, lender has now said, buyer, I can't give you financing. You lost your job. You have no way to repay the loan. I am not going to give you any money. Buyer is going to sign this form before or upon the closing date, no later than 9 p.m. If you ever are approaching that high of a risk of missing the deadline, I recommend you use my 8 p.m. rule. If your due date for anything, whether it's inspection response, failure of financing, don't do anything past 8 p.m. Get it done by 8 p.m. to terminate. You do not want your buyer to lose their earnest money. And remember, termination and signed by the buyer means that once the buyer serves it, the deal is dead. The seller can't come back and say, well, no, wait. Like as an example of inspection contingency, the seller, the ball is in the buyer's court, right? Last third section of 35R. You need to be done by either accepted by 8 p.m. or terminated by 8 p.m. Okay. Don't go all the way towards 9. It's just too much of a risk. Can you always put the offer back into play if the seller just was not paying attention? Absolutely, but it'd be better safe than sorry that you terminate the deal and your buyer gets their earnest money back than thinking that the seller is going to respond by 9 p.m. or sooner. Make sense? So you are going to serve this notice along with this form. Form 50. Form 50 is the release or authorization to release earnest money to one or both parties and both firms, whatever is agreed upon on this form. Once this is signed around, delivered to escrow along with the 90I, wherever the earnest money is going, then that's where escrow will send it to based on this being signed by all parties. Do not get stuck in the trap where escrow says, well, I need a form 51. Well, what is my rule about form 51? Area 51, UFO territory is a bad area. Form 51 is a bad form. You are not allowed to use form 51 unless you talk to me first. And this is because it is not a notice. Note that this says buyer's notice of termination. Notice means that one party can give notice to their party that they're terminating, whether right or wrong. Then you can fight over earnest money. Form 51 has to be agreed by all parties. It is a very dangerous form to use. It is only going to be used 1% of the time within a year. There may go many years where none of you use a 51. There'll go many years where none of my firms will use a 51. However, again, I need to make sure that is your only option. You can always terminate the transaction, both legally and illegally, but a rescission does not do that for you. A rescission says both parties have to agree that the deal never happened. And then where does the earnest money go? As an example, if you were to serve this as your failed financing instead of 90I, so now I'm going to take 51, my buyer signed it. I'm going to send it to the listing agent on the day of closing. And I think I've done nothing wrong. 9 p.m. comes and goes. Now it's the next day. Remember, the financing contingency says you have to terminate on or before the closing date. This is not a termination. This is saying, seller, I'd like you to kindly sign this and give me back my earnest money. That's all that says. It doesn't say I'm terminating. It just says, seller, please sign this and give me back my earnest money. Seller says, I'm going to sit on this because the buyer thinks they've terminated the transaction when all they've done is asked me to terminate the transaction. It's not terminated. Does everybody understand that? So never use a Form 51 unless you've called me and we've walked through our scenarios and our options. So if the seller doesn't sign this on the closing date and never signs it, now the buyer has forfeited their earnest money because I, as the buyer broker, used the wrong form. It's a very dangerous form because escrow doesn't even really know what it means. And escrow is never to tell you what form to use. They are to follow your instructions. So they can't say, well, I need you to do this. Well, no, they need to follow the instructions you have. And they should be telling you, you need to talk to your designated broker. So if escrow ever tells you what they need, you call me first so I make sure that that's exactly what you need. Because 99.9% of the time, this is not needed. It is very rare. I think I've covered everything. Does everybody understand the whole form? I really highly doubt it. My best recommendation is practice, practice, practice. Go through all kinds of scenarios. Grab another person from the office. Hey, you be the buyer, I'll be the seller broker. Let's work it. Let's do a deal. Let's pick any listing in here. I'm going to write on it. You're going to counter on it. You're going to do whatever you're going to do. And then ask a third party to come in and say, okay, you're the buyer of this situation. Is there anything you want to change? Or you're the lender. Like, create little groups of how to practice some of this. And if you ever just want to write things and ask me to review it, I'm happy to do it as a practice. I'll have to redline it. If you ever want to send me your paperwork before you do anything with it, i.e. buyer, before you submit it to your buyer for signing, or before you submit it after your buyer sign to the listing agent and the listing firm, happy to do that. Same with listing paperwork before you go live. If you want me to review anything, I'm happy to do that. Is there any questions online? All right. Well, I appreciate you all for being here. This will be recorded. This will be uploaded to the BKCO Hub under trainings. So feel free to utilize that as much as you need, but I'm here for questions at any time. Thanks for joining. Have a wonderful afternoon.
Thank you.
You're welcome. Bye, Sam.
Bye.
Bye.
Yes.